Ladies and gentlemen, good day and welcome to Rushil Decor 1Q FY2024 Investor Conference Call hosted by Asian Market Securities Ltd. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectations, projections, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Bhateria from Asian Market Securities Ltd. Thank you, and over to you, sir.
Thanks, Zico. Hi all. A very good morning and welcome all to the Rushil Decor 1Q FY2024 earnings conference call hosted by Asian Market Securities. From the management side, we have Mr. Rushil Decor, Executive Director, Mr. Keyur Gujjar, CEO, and Mr. Hiren Padhya, CFO. I now hand over the call to Rushil Bhai for his opening remarks. Thank you, and over to you.
Thank you, Karan Bhai. Good afternoon, ladies and gentlemen, and welcome to Rushil Decor Ltd. earnings conference call for the first quarter ended 30th June 23. I would like to thank Asian Market Securities for arranging this call and all participants for taking time to join this call. Today I am joined by Mr. Keyur Gujjar, Chief Executive Officer, and Mr. Hiren Padhya, Chief Financial Officer. We shared and uploaded the investors' presentation on the exchanges and hope you all have gone through the same. Let me share with you some of the key highlights for the first quarter ended on June 30, 2023, during which we witnessed a few notable changes in both our MDF and laminate business. This has helped us to expand our operating margin despite declining revenues and volumes. I am happy to share that during the quarter we have successfully completed our rights issue by raising rupees 107.49 crores. The milestone is not only a testament to trust our stakeholders place in us, but also a significant step towards shaping a stronger financial future. The right issue has empowered us to embark our journey of debt reduction, which is indeed a pivotal turning point for Rushil Decor. Our unwavering commitment to debt reduction has yielded substantial results. Since March 2020, we have delightedly worked towards reducing our debt burden, resulting in remarkable reduction in our net debt to equity ratio from 1.71 to impressive 0.65 as of 30th June 23. The achievement underscores our dedication to financial pursuance and discipline. We remain steadfast in our pursuit of maintaining a robust balance sheet to support sustainable growth. In pursuit of operational excellence, we undertook a monumental task, migrating from the legacy of Tele system to SAP after relying it on over 3 decades. I am delighted to share that our SAP implementation has been a resounding success. This transition, which integrated seamlessly across our organization within the 7 months, has equipped us with enhanced tools and capabilities for efficient decision-making and streamlined operations. The transition was a testament to the dedication and expertise of our team, and I would applaud them for their tireless efforts. Coming to few of the industry highlights, the wood panel industry is undergoing a transformative phase with a rapid growth in segments like MDF and laminate. Following a period subdued demand, we are witnessing a resurgence in the demand for the wood panel products. This is particularly existing as it's significant shift in the market dynamics driven by the increased demand from the residences and offices. Notably, the Indian wood panel industry is now valued at approximately 430 billion in financial year 23. The domestic wood panel is projected to grow at a promising 7.2% CAGR from financial year 23 to 26. This growth trajectory is attributed to the revival in the end-user industries. The Indian real estate industry is set to witness a phenomenal growth projected at the CAGR of around 20% from CY21 to 2030, reaching a staggering $1 trillion by 2030. The growth bodes well for the industry as well, as increased real estate activities often translate to a higher demand for the wood panel products. Additionally, the furniture market, valued at $23.3 billion in financial year 21, is anticipated to grow at the CAGR of 6% for the financial year 21 to 27. In conclusion, I would like to extend my heartfelt gratitude to our dedicated team, our partners and our stakeholders for their unwavering support. The successful completion of right issue and other prudent financial management have set the stage for a stronger Rushil Decor. As we move forward, we are poised to capitalize on the promising industry trend and opportunities that lie ahead. We remain committed to our operational excellence, customer-centric innovation, and sustainable growth. Together, we shall continue our journey of success and value creation. That is all from my side. I would like to hand over the call to our CFO, Mr. Hiren Padhya, who shall take you through the financial highlights. Thank you very much.
Good afternoon, everybody, and thank you, Mr. Rushil. I am pleased to provide you with an overview of our performance during the last quarter, that is quarter 1, FY24. During this quarter, our company recorded operating revenues of 192.8 crore, while the MDF business contributed rupees 146.7 crore, showcasing its resilience. The laminate segment contributed 41.5 crore, while the MDF business showed a slight decline from Q4 FY23. This was expected due to certain market dynamics on one side, and secondly, as I think everybody knows that we have already implemented SAP during the last quarter, and we have gone live from 1st of April 2023. So initial period of a couple of days, the production as well as deliveries have been affected. That has also affected the overall volume in terms of sales. We are also confident that the normalcy will already be there during this current quarter. Despite the challenges, I am pleased to report that we have maintained a positive trajectory in terms of EBITDA. Our EBITDA for the quarter 1 FY24 stood at 28.9 crore, which is reflecting a growth of 2.5% compared to the previous quarter. This growth can be attributed to the rise of volumes for value-added products within the MDF segment, along with strategic reduction in the prices of key raw materials within the laminate segment. Our net profit for Q1 FY24 was reported at 12.2 crore, which is again a reflection of evolving market conditions and the steps we have taken to navigate through them. While this figure has decreased slightly compared to the previous quarter, we are focused on maintaining stability and exploring avenues for growth. One of the positive highlights is the improvement of EBITDA. One of the reasons I can attribute is the value-added product in terms of MDF. If you compare quantity-wise, Q1 23, last year same quarter it was 23%. This has gone to 27% last quarter and 35% during this quarter. If the same figures are compared in terms of value, the last year same quarter was 30%, which has increased to 39% in Q4 23, and in the last quarter, that is Q1 2024, it has reached to 45%. Secondly, as you know that this has increased from 13.2% in Q4 FY23 to 15% in Q1 FY24. This underscores our dedication to managing cost and optimizing our operations. Additionally, our PAT margin stood at 6.32% in Q1 FY24, which is indicating our ongoing efforts to strike a balance between profitability and growth. Looking ahead, we are mindful of the challenges posed by the current economic landscape. However, we are optimistic about our strategies to drive growth and enhance value for our stakeholders. Our team is working diligently to identify opportunities, streamline our operations, and ensure the long-term sustainability of our business. In conclusion, while our Q1 FY24 financial results do reflect certain challenges, they also demonstrate our resilience, adaptability, and commitment to creating value. We appreciate your continued support and look forward to navigating the path ahead with determination and focus. That is all from my side. I would like now request operator to open the floor for the questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yes, hello. Yeah, good morning. Good afternoon, sir. My first question pertains to the MDF segment. I see sequentially, the domestic volumes remain impacted. Could you discuss what is happening? Why volumes are under pressure? It is just because of imports, or are there any other factors? And sequentially, your realization in MDF has gone up. Is it predominantly to do with the change in the rise of high value-added products?
Yeah. Good afternoon, Rajesh.
Hi, sir.
Yes, because in the first quarter, as you say, there was a major two reasons. There were two reasons. One was the market was a bit slow, and as in our opening speech, it was mentioned due to SAP implementation, there were certain issues. That's only the reason. Otherwise, now I think market is quite, we expect that it will open up soon because festive season is approaching. And I think this is always like this. Quarter one is always, big.
Sir, this SAP you said is for past 7 months, this integration has been going on. So indeed there would be an impact. But is it also because of the imports, a good amount of, I wanted to understand, is it the domestic market size which has seen a contraction year on year, and that is why players are impacted, or it is also because the imports which have risen in past 6 months, they have taken away the volume share from domestic players?
No, I think, if we talk about imports, we don't see much of increase in last quarter. I think, if I'm not mistaken, from Vietnam, it is around 40,000 CBM in first quarter, which is almost like 35-40 is coming in even last quarter too. So we don't see any much of a problem in that part.
Mm-hmm.
Quite stable, and even now, I think in this quarter we see a lot of demand coming up from OEM segments. So
okay.
It looks like there is some issue with some, price of import or something. This is first part. Second
okay.
part, as I said, first quarter demand is quite slow because, you are always finishing your last quarter financial year and TOD and a lot of things. So we feel that in this quarter now market will improve in coming days. As such, we don't see any issues with the MDF demand.
So for full year, what sort of numbers you're looking for the domestic volume, domestic volume growth? Why I'm talking more on domestic because
we are definitely trying to maintain our domestic volume. Maybe if I talk about right now, it's almost like we are targeting 35 to 40,000 CBM per quarter. That's our target for domestic.
Okay. So why I was focusing on the domestic, because what we understand is the domestic market is where the margins are much better, whereas the export margins are in single digit or even low single digit. Is this understanding correct?
Yeah, your understanding is to the extent correct, but export margins is significantly improved in this quarter, I guess.
Okay.
Realization from last quarter, it was around 18,000 something. This quarter, it is around 19,200 something. And I guess we have also started exporting value-added product. I would say almost like now we are 15 to 20% is now value-added product that we export.
Okay. And sir, could you discuss on the margins which you make in exports and domestic? Even a broad number would be helpful.
The margin in terms of, you're saying MDF?
EBITDA margin. MDF export and domestic, what would be the margins?
See, in terms of, as you rightly said, domestic margins are pretty well. And in terms of, we have two plants where in the first plant in Chikmagalur, we have value-added products are more than 65%.
Right.
Margins are pretty high. Comparatively, the AP plant has a little lower margin. And export, again, margins are low, but then for the last 1 or 2 quarters, it has been improved. And we are also catering to a couple of other countries compared to the routine, the countries where we were exporting laminate also. But now we are focusing into European countries also, even to some extent Far East also. So considering that the margins are low, they're definitely in terms of export. But gradually for the last quarter and I think way forward, the way we have planned, the margin will definitely improve. But I don't have exact figures in terms of margin in terms of percentage.
Sure. Sure, sir. Thank you. I'll come back in queue.
Okay. Thank you.
Thank you. Our next question is from the line of Kaustav Bubna from BMSPL Capital. Please go ahead.
Yeah, hi. So I had a question on the MDF industry. So you're saying that Rushil expects demand of about, if you annualize the numbers you gave, it's about 0.4 million cubic meters annually. I'm just trying to understand, the figures I have is currently the total domestic supply is around, from the organized players, is about 2.1 million cubic meters annually, which is expected to go to 3 million in the next 1.5 years. The supply number, cubic meters. So I'm trying to understand what is the demand number, what is the total domestic demand for MDF annually versus this 2.1 million cubic meter supply figure?
So, first of all, I would like to mention that our production capacity altogether is 3.3 lakh per annum. And as you said, our existing production supply is 2.3 million CBM per year. That's our MDF capacity in industry. More or less, if you see in first quarter, almost 75% to 80% or 70 to 80% it was operated. So we can assume this is the demand.
Okay, but that operation, that number you've given would also include imports, right?
Sorry?
But that would also include exports. Sorry, that would also include exports, right? domestic and export demand?
Export is not from every player, because it's only two players. They are located in southern region close to coast. They are only involved in exports. So majorly it's for domestic only.
Okay, so if demand is about, let's say if we have to take out 5-10% from exports, and let's say demand is around 60%, 65% of supply, I'm just trying to understand, with so much capacity coming up in the next 1.5 years, how is that going to impact pricing? And also imports are back, right? So and that's low cost MDF, so that also gives us our competitive environment changes versus what it was post-COVID. So I'm just trying to understand what is giving confidence to maintain realizations given the cycle is different to what it was post-COVID.
Yeah, hi, this is Rushil.
Hi, sir.
First of all, talking about the import. So import is always about regular MDF. It's not about the value-added products. And as we have been pursuing our goal to achieve 40% of our value-added product out of the total capacity, so that is driving us harder that we are getting a good demand in terms of value-added. So if I talk in numbers, so in Q1 overall we were around somewhere between 23% for the value-added product, which last year was somewhere around, last quarter was somewhere around, this quarter was 35% and last quarter was somewhere around 23%. So we are gradually increasing our numbers by making sure that we make a more value-added product and sell that in market, so that we don't have to compete on a longer run to the imports.
Okay.
And demand for value-added product comes from the OEM market, as well as the consumers nowadays are getting educated over the different categories of MDF, such as we say Max Pro, that is HDF. So nowadays we are also educating consumers and the carpenters to make sure that they compare the MDF with the right plywood. So that is also creating a more value addition to our journey of growth.
So when you talk about value-added products, are you talking about flooring and low-pressure laminates, or how do you...
No. If we talk about value-added, so there are certain type of boards, such as exterior grade board, HDF board, then for pre-lamination, short, then paper sticking, coloring, etc., etc. There are too many value additions that can be done with the MDF boards, but certainly the value added is more to be considered on the HDF and exterior grade side.
Okay, great. Thank you so much. Thank you.
Thank you. Our next question is from the line of Jojo Shaju from Alpha Invest Core Research Services Limited. Please go ahead.
Yes, sir. Thanks for this opportunity. So my question is more of a product-specific one. So firstly, we are seeing a lot of new particle board capacities that are going to get operational by next 2 years. So looking at the price difference of these products and the overlap of these applications, do you think particle boards will take more market share from MDF? What is I just need to understand your thoughts on this.
Hi. So we talk about the product first. So particle board and MDF both together are different products, and both of them have a similar application, but the targeted audience is different. So we don't see any kind of a surge in demand of MDF because of their particle board capacity coming in. So particle board has its own market and it will be growing at its own pace. Then the price difference, yes, is well understood, but MDF has a stronger fiber bond, so because of which the end consumer has more confidence in buying MDF rather than particle board.
Okay. And sir, on the margins front, what are the long-term margins you are expecting from the MDF business? And if you could give some sense on what will be the margins the particle board as a business is getting, I just want to understand the difference of both.
See, so far as particle board is concerned, I think I won't be able to answer. In terms of MDF, what we have been into this business for the last more than 1 decade now. See, we last year the overall MDF margin was around 19 to 20%, which we will definitely maintain. For this particular current quarter, I think Q1, it was a little bit deep for 1 or 2 percentage, but over a period of the whole financial year, we will definitely maintain this margin in the range of 19 to 20%.
Okay, sir. Okay, thank you. That's from my side.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Parth Bhavsar from Investec. Please go ahead.
Yeah, hi sir. So thank you for the opportunity. So I have few questions. The first one would be that there is considerable increase in our exports. I wanted to understand, like, is it that we have increased our exports because of the export obligation, or is it because the realization were much more favorable in the exports market?
See, the exports is not because of any kind of export pressure. The current scenario was such that we increased our export in terms of we were able to get entry to the certain countries where we have been targeting since long. And because of that, we also get a good value-added realization in this. That was the all strategy. And also when we talk about the operational margins. If we have a certain number of CBM that has to be produced, then obviously the operational margin gets even better. So that was the whole strategy about managing domestic orders and export orders and getting out the best realization possible.
Okay. So what is the export obligation like? Is there anything pending?
See, as of now, out of total around 200 crore obligation, till June ending, the pending amount is around 73-74 crore, for which we have got time up to December 2024. So we are in a very much comfortable position considering the way we have increased exports during the last couple of quarters.
Okay. And so the way things are moving in the exports market, is there any targeted domestic export mix that we are eyeing going ahead? Like, is there any mix that we would which would be favorable to us?
So it's always, we try to maintain the ratio for 70-30, 70% domestic, 30% exports, but we change our strategy accordingly as and when required.
Okay. And so we see a lot of capacities coming in over the next 2-3 years. So do we think that additional supply could put pressure on pricing once these capacity come on stream?
See, the mainly pricing pressure comes.
Hello. Hello.
Mr. Keshav, your line has been unmuted. You can go ahead with your question, please.
Hello. Hi. Am I audible?
Yeah.
Yes, sir.
Yeah. So, sir, my first question is it fair to assume the SAP impact is quite minimal in case it is anything material?
Sorry to interrupt, Mr. Keshav. There seems to be a little disturbance from your line, sir. Okay.
Yeah. So, my question is, in case the SAP impact is material, can you please quantify it?
No, as such it is not material. As I said in the opening remarks, the volume was affected because of the market dynamics as well as SAP related issues. So this is already settled now. The whole financials have been taken from this SAP only, so there is no such issue as of now. It is a one-time issue.
Okay, got it. And what about laminate revenue and margin guidance? Do you maintain the margin like 10 to 11% for the year?
See, I think if you see for the last couple of quarters, I think in the last year, one quarter we had reached around 9%. Again, there was a slight dip, and then this time the only because of the fact that there was a reduction in terms of prices of raw material, this has gone to around 9%. And I think if the prices are stable, I think we will definitely maintain this margin. That is for sure.
Okay. And what about the top line? We are seeing a degrowth. How should we read it going forward?
See, as I said, it is a one-time effect, so I don't think it will affect in the forthcoming 3 quarters. The normalcy will be there in the current and the next 2 quarters, definitely.
Okay. And why is there is a jump in other income?
Just a minute. Okay, I think if you remember, quarter 3 we had other expenses where 10 crore loss was related to forex.
Yeah.
And this time it is a reverse effect. So as per the accounting standard, we generally show if it is a profit, then it is shown in other income. And this time we have almost 2 crore rupees as a forex profit. And if it is a loss, then it is shown in other expenses.
Okay, got it. Okay, thank you. I'll come back in queue.
Okay, thanks.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Krishna S. from Vihas Advisors. Please go ahead.
Yeah, thank you very much for the opportunity. So I think hearty congratulations to the management for having, in a very difficult environment, the quarter is also a little bit of a seasonally little bit difficult quarter. So the performance is quite, okay in terms of, performance. So my only question is that, we have, if you look at the big picture, so the imports are definitely coming in. So now there is an argument that, the imports are coming mainly because of the exporters. They are not able to sell in the other markets, which are the developed markets, right, which are in maybe a little bit of a slump. So those kind of quantities are actually coming in, and it is in a way they are trying to sell it at lower prices in India. So if this is the trend, so my question is whether the assessment is right. And secondly, if this is the case, whether if this seems to be a temporary phenomenon or whether it would change. And if it changes, then can we see that, the import price, maybe the landed price would go up, and similarly the export realizations may also go up. So whether that trend we can see, whether it is visible, or what would be the guess of the management?
Yeah, hi. First of all, I would like to tell you that at present, all imports coming from Vietnam and Malaysia, that's because of some issues in European and American markets. And probably, it will take another 3 to 6 months or a year, I don't know. But yeah, that's my assumption, that things will come down normal. They are selling because they have to, produce on marginal cost, and then they are selling in India or Gulf market. Once there is a issue of demand and supply thing, then definitely they will increase their import price. If you see today, the freight cost is again from $300 to $450. So again, the landing cost is now going up. But we have seen that they have not reduced their base price. So it's still the same. So as long as import is concerned, it's a short-term thing. In long term, I believe their preference is in another market because they are also watching what price domestic players are offering. So I'm sure they don't want to sell at cheaper price. They are just, managing their volumes. And if you see, total entire industry is around, if we talk about 1.8, 1.9 million per CB, 1.8, 1.9 million CBM per year. Import is around 75,000, 80,000 per quarter, which is probably quite negligible. Today, 60% import is coming in South and 40% coming in West region. So still your North region and our East region is quite stable in terms of pricings and other demand. I hope I have answered your question.
Yeah, sir, you have beautifully answered. Just one more follow-up in that. So why not contemplate, approaching the government for some kind of anti-dumping duty or some safeguard duty kind of thing?
I think there is some referral is there with Finance Ministry, and I think we are awaiting the response, I believe. Okay, so efforts are on that front, right? Efforts are there, but, we have to see. We have to wait and watch.
Okay, and so do you see any further, the best judgment, in terms of, do you see this further going up, for example, 80,000 is the per quarter export. Now, say, if this goes up to, say, 1.20 or something like that, so that may further depress the prices. So do you see this happening, or you see that the bottom is forming in terms of pricing?
I think since last 2-3 quarters, this 75,000-80,000 is the figure. Because end of the day, they have to see what kind of volume they want to give to India at this price.
Understood. So you think that the pricing, especially the pricing would be bottoming out, we do not foresee any major further erosion in price because of the import competition.
In fact, I see in quarter 2, there might be some reduction in import.
Okay.
Because a lot of OEM, previously our customer, they used to import. Now they are asking us for fresh quote and all.
Understood, sir. Sir, one last question. On the laminate side, we have come up with a plant. We are doing some capex of some around 60 crores for adding machinery for some value-added products. So, what is the focus of the management with respect to the laminate business? Because the laminate business per se is also taken by itself. It's a very good business as such. So, what is the strategic direction which the management is looking at?
So, I would like to say that laminate is our core business. We started our journey of growth and everything with the first business of laminate. So, we are now fully focusing on the laminate business, and yes, the positive results for the laminate would soon be declared. We have recently finalized the land in Mansa, from where it's just near to our current existing plant. So, yes, we are looking forward for the commencement of the production in the Q1 ending.
And I would also like to add, we are aggressively working on promoting and marketing our laminate and MDF products in domestic market also. We are working very hard, and we are working on certain strategies too.
Okay, sir. That's all from my side. Once again, hearty congrats for fighting it very hard this quarter, and good luck for the quarters ahead.
Thank you very much.
Thank you. Our next question is from the line of Narendra from Robo Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. I just wanted to know the volume contribution of your value-added MDF product.
In quarter 1, it was 35% in terms of volume, and value it was 45%. If I compare with last quarter, then it was almost 27%.
So you want to take this volume number to 40% of your total production, right?
Yeah, so far we have reached to 35%, and now our target is to reach 40%.
Okay. And any guidance that we have for the revenue and margin numbers for the FY24?
As such, actually, this quarter was deep, as you know. We will definitely strive for the at least 7 to 10% increase in terms of volume. The value may be depending upon the exact mix of value-added versus clean. So, accordingly, I think for next 3 quarters, we will definitely improve compared to this quarter. And in terms of margin, as I said earlier, last year overall margin we will definitely maintain. Though the first quarter was a little deep, but coming 3 quarters we will definitely improve in terms of margins. And that is mainly depending upon the value-added product and other operational efficiencies after having implemented SAP.
So I can see that the first half of last year was exceptional. I mean, about 20%. So are we, will we be able to do that again, or was that a one-off?
See, I think that first 2 quarters last year was exceptional for us and for other industry competitors also. So this was again one-off, but then as I said, we will try to maintain our last year's total margin which we have earned last full year, that is 22-23. So in terms of percentage, if you say, then it is around 17% EBITDA, which we will definitely maintain during this financial year.
Okay. And are we planning to reduce the debt figure, even further, or what's the outlook there?
See, as a part of our strategy, as I had mentioned earlier also, we have 2 main agenda. One is like we don't want to dilute, and secondly, as a part of that strategy only, we had planned for this right issue. The result was very clear that 55 crore was reduced from the promoter's loan, and during this period we had also repaid as per the schedule. So as of now, the debt equity ratio is 0.66. It will definitely improve, and there is no specific plan for reduction of debt except the normal scheduled repayment of loan. And for this financial year, total repayment would be in the range of 55 to 60 crore, out of which first quarter we have already repaid 17 crore.
Okay, got it. And the new facility that you are building for the laminates, what could be the capex, if you could throw some light?
See, as of now, we have just finalized the land. I think the feasibility study and everything is being finalized. Maybe I think by next quarter we'll be able to know the exact details in terms of date, if any, to be taken.
Okay. Thank you so much. All the best.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Our next question is from the line of Arun Baid from ICICI Securities. Please go ahead.
Sir, you mentioned about value-added product sales in this quarter for exports. Can you give us an indication, sir, of the 15,000 odd CBM we exported, how much would be value-add, and at what price?
Plain was around 12,879 CBM and value-added was 2,177 CBM.
And so this will be what price, the price for value-add?
Value-added.
Roughly the price for the value-added product was around 24,000 rupees a CBM.
And the plain would be similar as 18,000?
Sorry?
Plain would be at what price? The plain export prices?
Plain would be around 18,800 something.
Okay. And just to understand a bit more, so this value add, you said you opened up a new geographies. Which market would be these, sir?
So we have started selling it to Portugal, then some parts of Africa. Even we are sending our value-added materials to Canada as well, with all the certifications required.
Okay. And I guess in export we have normally an order book. So how is the order book on the value-add part looking for the near term?
For export, yes, the value-added book for this quarter is also looking very interesting. So we'll be doing around, we may increase around 10% more to this in the value-added in exports.
And on the domestic front, sir, of this sales of this 44,000 CBM, how much would be OEM and how much would be retail?
Specifically, we sold around 23% of OE to OEM of all our domestic sales. So you can say around 77% to retail and trade.
And so when you say OEM, so how much will be the pricing gap between OEM and retailer?
It depends, because in OEM also we are selling around 26% value-added products and 74% plain. So again, some of our OEM, their pricings are, quite competitive. I would say even 10-12% cheaper than the market price.
Okay.
Our market price.
Yes, sir. And on the wood cost, how's the timber costs playing out?
Timber cost for the last quarter was approximately 2 to 5% higher than the last quarter.
So what would be the number-wise, sir, if you can give that?
Number, currently I don't have. I have it in percentage, so I can justify it in percentage.
Okay, and has the cost gone up in July, August compared to Q1?
I think, yes, it has gone up further by 4%.
And how the chemical prices reached, because that has come down, so how that played out?
In chemical pricing, we see a dip of 8 to 9% in last quarter.
And currently, any more dip?
Sorry, I didn't get the question.
After Q1, have we seen more prices falling in chemical, or?
Yeah, it's now more or less steady.
Thank you very much for your answers. Thank you.
Thank you. Our next question is from the line of Akshay from Canara Robeco Mutual Funds. Please go ahead.
Yes, sir, thank you for the opportunity. Sir, just one question. So, sir, one big facility has got commenced in the West. So, obviously, in the initial years, they might look to sell it in, say, South or North. So, sir, do you see some pressure like they chasing your dealers? And is there any rise in the competitive intensity from their side on your dealers?
That's a part of market. So that's okay. We approach competitors' dealers, they approach our dealers. It's very important to maintain, market share. And successfully in the month of July, we managed to maintain our market in Gujarat.
Okay, but you do see that there is some rise in competitive pressure, right?
Yeah, definitely. But then there is a demand also there. So
okay.
Shouldn't be.
Okay, sir. Thank you.
Thank you. Our next question is from the line of Shubham Thorat from Perpetual Investment Advisors. Please go ahead.
Hello, thank you for the opportunity. Am I audible?
Yeah.
Yes, sir.
So I just wanted to know the price differential between our domestic MDF and imported MDF.
I think export is around 20% cheaper probably. And if we go further center part of India and all, then it's maybe around 12% or something like that.
Okay, thank you for that. And so you mentioned that the particle board and MDF may have similar application, but their targeted customers are different. So can you please elaborate a bit more on that? What customers are different for the particle board as compared to MDF?
Now, for example, there are certain low-cost furnitures like, computer trolley and TV trolley and sort of, low-cost table and all. These products are basically produced with the particle board. Sometimes they are also using for, partitions and other applications. And there are big markets like Eastern region, Northern region. There is a lot of particle board applications.
At the same time, when we talk about MDF, we have a wider application in terms of making kitchen from the HWF, HDF. Then we have giftings that have been made from MDF that is not possible from particle board. Then we have cake boards that has been produced from MDF that is not possible from the particle board. So the applications for MDF are way more vast than particle board.
Oh, okay. Thank you. Thank you so much, sir. On the list.
Thank you. We have a follow-up question from the line of Mr. Parth Bhavsar from Investec. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity again. So just wanted to know, in terms of laminates, we have seen peers growing, reporting much better volume growth. So is there a possibility that we lost some market share, or if not, like what was the reason behind the slow growth in domestic market laminates?
So that's all, in opening speech, not only like slow demand and SAP implementation. There was
okay, and nothing besides that.
And seasonal effects too. Like, now this quarter is all about party festivals and things. A lot of inaugurations will take place on Dussehra and Diwali and all. So now next 2 quarters will be
better. Okay. And sir, in terms of realization as well, we lag our industry peers. So, like, what could be the reason on laminates?
It's all about product mix. Like you are selling certain low cost product in volume and high. So it's all about like low cost and high cost products mix. Because in laminate we have multiple product mix. We have also, different export countries. So suppose, some countries we export more, then, realization may be less. So it's all about product mix.
Okay. So is there any way to, understand this product mix, like for domestic and the export business, like how we are planning to go ahead with it? Are we planning to move more towards higher value, higher margin products, or like is it completely dependent on the demand?
Focusing more on a domestic market also equally, and then our expansion is more for the export market, and then we are also opening up our extension with this new product line like toilet cubicles and partitions and a lot of other applications. So in that way we will be able to improve our product realizations for sure.
Okay.
As I said earlier, we are also working hard on promoting our brand in this market very strongly.
Yeah. Okay. And so just one thing, in terms of MDF and laminates, just wanted to confirm that you mentioned that you'll maintain MDF margins at 19 to 20%, right?
Yes.
And for laminates, how much would it be?
See, laminate, if you see the track record, last year it was in the range of 6 to 7%. Mm-hmm. This time, because of the fact that the raw material prices have decreased, and if it remains stable, I think we can definitely achieve 8 to 9%. That is for the present operations. Now, in the last person reference, I would like to add one more thing. See, we have been in this business for the last 30 years. We have so many clients which are there for the last 2 decades, and we know this export market very well. And the way we got indication from our customers only, and because of the fact that our strategy is to increase our margin, and that is how we have come up with this new project of jumbo boards. Now here the issue was we have already entered into a couple of countries, but then Europe, America, Australia, New Zealand, were the continent where we were not able to. The reason was they were ready to take our other products, provided we can supply them just the new product which we are planning as of now. So that is why we have gone for this new project. Once we start productions and if we reach 50-60% capacity, on one side our total revenue will definitely increase, and margin-wise, as of now, suppose we are at 7-8%, for the new project in new, I think, 4 or 5 continents, our margin would be definitely higher than the present one. So that is why we are going for this project, and down the line, 2 to 3 years, I think we are expecting on one side increase in revenue in terms of laminates, and along with that, the profitability also increase. At least more than 10%. That is what our target for the next 2-3 years.
This is a jumbo board project, right?
Yes, jumbo board project.
Yeah. Okay. And sir, in terms of like you guided, I guess MDF volume would grow at 10% year on year. And what would be this guidance for laminates?
Yeah, for the laminates, I think, definitely once we have a new project, so there will be addition of more revenue.
But for FY24?
FY24, I think the overall increase will be around 10% only. This new project will start production maybe in the second quarter of the next financial year. And as you know that initially for the next financial year, the capacity utilization will be in the range of 50 to 60%, which will give us revenue, but not as much as we were expecting. So full-fledged, I think the revenue will increase in the next financial year.
Thank you. Sorry to interrupt. May we request you to rejoin the queue, please? Thank you. Our next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Hi, sir. On the MDF domestic volumes, if I recollect, did you guide that quarterly you would be targeting 35,000 CBM?
No. We are targeting earlier 35,000. It was from 35 to 40,000 volume from our AP plant.
Okay, so
if I go all together, I really would love to reach around 55 to 60,000 CBM from both the plants.
So this is an achievable number Q2 onwards, right?
Yeah, we are, yes. Even if you see our last quarter, that was on Q4, we were almost 60,000 for the domestic, and export was around 5,500. But we want to maintain our export volume around 12 to 15,000 per quarter.
Okay. And sir, in the laminates, the volume that you export, the revenue number Q on Q have been a decline, which we understand could partly to do with the, freight cost coming off. Could you just let us know, how do you bill? When you bill these export volumes, is the freight component included in your top line? And if so, how much would that be on a broadly?
I think in laminates, the cost of freight is very marginal.
Okay.
It's a weight-based commodity. Sometimes it's less than 3 to 5%.
Okay. On an overall basis for last 5-6 quarters, you mean to say this would be under 5%?
No, I would say, during the COVID, freight was quite high, but now it has come down.
So last year, same time, what would be your percentage of your revenue, which would be export revenue?
Export, I think it was almost more or less 67% and 33%. Something.
No. Understand. The export revenue you have already shared. I'm just wanting to know the freight component, shipping freight, which would be booked in the revenues, export revenues.
We have, proportionately pass on the cost to customer also.
Correct. No, I'm just wanting to see your realization.
For example, we used to charge freight surcharge to our customer. Whatever the agreed price was there, And suppose the container cost, normally we pay $1,000 and sudden there is a price of $4,000, then we used to surcharge container cost $3,000 from them.
Okay. So that was recorded in your realization, right? Reported revenue. So if we have booked 300 crore revenue in the export side, would it be fair to say that what % of this would be having freight cost built in the revenues?
Rajesh, I need to check that detail.
Sure, I'll check with this
come back to
separately.
Yeah. It's not a problem for you.
Sure. Okay. And sir, lastly, what are your future plans now? Laminates, you would be doing the capacity expansions and, the high-end product. But beyond this?
Very much focus on our laminate expansions. Some internal discussions going on for expansions and new projects and all. But so far we have not concluded anything. But yeah, laminate is our priority right now.
Great, sir.
And as I said, reaching volume from AP plant and Chikmagalur plant is also very important for us.
Okay. Great, sir. Thank you. All the best.
Thank you very much.
Thank you. Our next question is from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Thank you for the follow-up. It's great to hear that OEM is coming back to Rushil again. I just want to understand one thing. As the MDF prices have increased in export market, then why has it not translated into higher import price?
Yeah, it is actually. If you see the freight cost from $300 to $450, so there is some increase in import landing price now, and that's one of the reason why OEM are approaching us for fresh quote.
Okay. The reason I was asking this question because still you said the difference between import and your price is 20%. So that was already at 15-20% earlier.
But that's what we are talking about. That's Chennai port. But now if you want to take it to Hyderabad or Bangalore, you need to pay another 5-7% transport cost, and then container terminal charges, CTS and CFS and all these expenditures are there.
Okay, got it. One last question from my side. As you were saying, import might not decrease and, players are already making, 20% kind of margin in MDF business. So do you think you have a strong case for anti-dumping duty?
I think
actually, we are in contact with the association and the other people for this. But as of now, we cannot answer something really strong. There is nothing concrete coming up till now, so we cannot answer on this.
Okay.
Thank you. We move to our next question. Our next question is from the line of Smit Shah from AMSEC. Please go ahead, sir.
About that, and what number are we looking for the entire year FY24?
Sorry?
Sir, the interest expense has gone up sequentially despite some debt reduction. And what are we targeting interest expense for the entire year FY24?
See, it should be in the range of 26 to 27 crore for the whole year.
Okay. Okay. Since there are no further questions, any closing remarks you want to make, team?
Thank you once again for your interest and support. We'll continue to stay engaged. Please feel free to reach out to us for any further details or information required. Looking forward to interacting with you next quarter. Thank you.
Thank you. Ladies and gentlemen, on behalf of Asian Market Securities Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.